Man, financial management, people get really tripped up here. We really want to be able to help you in this one. A lot of board members think that because they don't have financial, like they're not a CPA or they're not an accountant, that they're not going to be a qualified treasurer. Some people think that if they are a CPA, that they are the best qualified, and sometimes they can overcomplicate these budgets or the financial process. And then there are some that get it, and it's great. But we just are encouraging, try not to overcomplicate things, because I think people stray away from the financial aspects of the board member responsibility, but
It's the one thing most people are afraid of.
Yeah.
And again, I get that. It's other people's
totally.
money. It's other people's money. And so even though your money is in that pile, it's still other people's money.
Right.
And so you want to be sure that you are doing the right thing, spending it in the right way, and following up on it as closely as you can. Yeah, the reality of it is that most of the financials that we produce are cash-based financials, and it's just kind of like your checkbook. I don't want to simplify it too much, but it really is. Money in, money out.
Yes.
And that's the way it works. Now, most people struggle with the idea that you're not in the business to make money. And what that means is if you get $5 at the beginning of the year, you should have spent $5 by the time you got to the end of the year. So you want to end up with zero.
Or saved it.
Or saved it. Or put it in reserves. One or the other.
Maybe there. So let's talk about the difference between an operating and a reserve account. It's kind of like it's your personal checking account versus your savings account. Okay? The only difference is we don't get the same rates for your savings account that you would personally. So you are, we do need to stay in the moderate to conservative market when it comes to putting any of your monies in maybe possibly CDs or a different money market account. What's the FDIC limit on any account?
$250.
That is correct. So
That's
the cap is $250,000. So if you are an association like Chet's that runs, let's just say, a $1.5 million budget, I can guarantee you that you've got more than $250,000 in your operating account at one time. In fact, you probably have somewhere closer to $800,000, maybe even that, in your reserve account, because you know that you've got a project that's coming up. Just remember, it's okay to diversify your funds. You just have to do it in an appropriate way. So make sure that you're leveraging your property manager and your accounting team to properly help you with some ideas of how we can make sure that everything is covered and any ideas for your reserve accounts. Okay. Then we've got, what's the difference between operating and capital expenses? A lot of people ask this question a lot.
So I have a Chet's Cliff Notes cheater version of how you make these decisions. And so far it's worked.
For him.
And that is, if it costs more than $10,000 or will last more than 3 years, it's a reserve item. And so let me put that in perspective. You may need to replace your HVAC system in your clubhouse. Well, that's not going to cost, theoretically anyway, more than $10,000, but it will last more than 3 years. So that becomes a reserve item, not an operating.
For people who may not know always the different things that should go in what category, you should also know in the state of Georgia, unless your declaration says otherwise or your bylaws, there is no reserve fund requirement, okay? So in the state of Florida, which Chet can speak to this better, in the state of Florida, if you say, I'm going to throw $100,000 at the pool this year, I have to spend that $100,000. It's earmarked, and I can't spend it for rock climbing gear, right? But in the state of Georgia, that's not the case. So just be careful that you understand the restrictions within your state and also within your governing documents. Go ahead.
Sure. No, it's the assigned versus pooled reserve. Mm-hmm. And if they have an assigned reserve, if you say you're spending $200 on the roof, better spend $200 on the roof. If you're saying, as she said, you're spending $100 on the pool, That's all you can spend that $100 for is on the pool. Whereas in Georgia, we have a lump sum that we're shooting toward, and that's based on several items that we have in our reserve study. And that reserve study gives us a rule of thumb of these are all the things this year you're going to have to pay for, so you need to have this amount in your reserves so that you can cover those. Now, one of the gotchas in that, and I'll give you a short Cliff Notes version of how this can really get interesting, is I was managing a property on Hawaii, and we had 3 miles of fencing that we had to replace. And the fence posts were $3 a piece in October. When I went to buy them 2 weeks later in November, they were $11 a piece. And so my reserve had to kick in to cover those differences. And you're going to find this happen all the time. It's why we recommend that you get a reserve study every 3 years, at the very least, because prices change, contract costs change, labor costs change. And so you want to be sure that you're following up with that as quickly as possible. So every year you're budgeting toward that end. Moving on.
So now we're talking about revenue and assessments. All right, so now we've got our bank accounts. We understand what this is. Chet already talked about we're a not-for-profit. So that means money in, money out. What we budget is what we're going to collect. If we have any more, we're going to put it into savings. If we have any less, we're probably going to have to take it out of reserves. So this is the time where I say we don't gain money from bake sales. We don't do car washes. We don't, unfortunately, have fundraisers that can help us get money. Assessment revenue comes solely from the association. And I know it's never a topic of conversation that anybody wants to discuss, but sometimes when you are cash deficit, you need to increase your assessments. And there is logic behind that. It doesn't mean it's going to be any easier to have to discuss it to the association when you implement it. It just means that if you're sitting here talking to me saying, Melissa, we have 50% delinquency, I just don't know how we're going to get people to pay.
And the problem lies in that mentality.
You will get monthly financials that are allowed to be released to the association. What the association receives is a balance sheet and an income statement. The board of directors gets the full package that has the trial balance, the transaction by detail, that has the AR aging report, that has the violation statuses, the ARC statuses, all kinds of fun stuff in there, right?
Sure. And if you're one of those associations that has stipulations on how bills get paid.
Yes.
What I mean by that is that Heritage can't write a check. We have to print the checks, send them to you, and 2 of you have to sign off on it, or 1 of you, or all of the above. And then the checks get mailed out. That requires a lot of planning and a lot of thought. So as you do that, I'm not suggesting that you change that. I'm suggesting that you modify your policies to accommodate timely payment. And
Awesome.
that's really all I can say on that.